The money you see in your bank account isn't really there. And no, that's not a metaphor or a conspiracy theory. It's just how the system works. If everyone walked into their bank tomorrow and tried to withdraw their cash, the whole thing would collapse in a matter of hours. Because the money simply doesn't exist in physical form. This isn't a bug, it's the design of modern banking. And to understand how we got here, we need to go back a few centuries. Back in medieval Europe, money meant gold and silver. If you were wealthy, you literally carried your wealth on you. Coins, jewels, whatever you could trade. But carrying bags of gold was dangerous. So people started leaving their valuables with goldsmiths because goldsmiths had secure vaults. In return, the goldsmith would give you a receipt, basically a note saying the person holding this can come back and claim their gold. Over time, people realized they could trade these notes instead of the physical gold. It was easier, lighter, safer. And that's where the trick started. Goldsmiths noticed something. Almost nobody came back to claim their gold at the same time. Most of it just sat in the vault, untouched, so they got clever. If they had 1,000 coins, they would issue 2,000 notes. They could lend out these extra notes, which weren't backed by real gold, and charge interest on them. They were literally profiting off gold that didn't exist, and people accepted it. That idea became the foundation of modern banking. Fast forward to the 17th century. Governments adopted the same model. The Bank of England was created not to serve the public, but to deal with the Crown's massive war debts. The bank lent money it didn't actually have, and taxpayers paid the bill. Sounds familiar, right? The United States did the same thing later on. Early banks printed more notes than they had gold. Everything worked, until people panicked. When crowds rushed to withdraw their money, banks collapsed overnight because the gold wasn't there. Instead of ending the system, governments doubled down. They created central banks, basically giant safety nets, so the illusion could continue. Now fast forward to today. Let's simplify it. When you deposit $100 in a bank, you think they keep your $100 safe. But historically, they only had to keep around 10% of it, meaning they held $10 and loaned out $90. That $90 gets spent, deposited, loaned again, deposited again. By the end of the cycle, your original $100 becomes almost $1,000 in the economy, but only the first 10 are real cash. Here's the crazy part. In the US today, reserve requirements aren't 10% anymore. They're zero. Banks aren't required to hold anything against your deposits. So what stops them from creating unlimited loans? Not reserves. Those don't matter anymore. What matters today is capital requirements, the rules written in Basel, Switzerland. Banks can create loans first, literally typing new money into existence, and then check afterwards if they have enough capital to support the risk. That's why more than 90% of the money we use today isn't cash or central bank money. It's bank-created money, money that appears the moment a loan is approved. This system leads to 3 unavoidable results. 1. Inflation. Because new money is constantly being created through loans. 2. Endless debt. Since money is born as debt, the system needs people borrowing forever just to stay alive. 3. Concentration of power. Those who own assets get richer. Those who rely on wages fall behind. History has warned us over and over. The Great Depression, the bank runs of the 1800s, the 2008 crisis. Every time confidence cracks, the system shakes. And every time governments choose the same solution, patch the illusion, push the problem forward, hope people keep believing. So what does all this mean for you? It means money isn't wealth. Wealth is land, skills, knowledge, real assets. Things that hold value even when the system doesn't. It means debt is not harmless. It's the engine of the system, and you're part of the fuel. And it means inflation isn't an accident. It's baked into the design. This isn't about fear. It's about awareness. If you understand how money is created, you can protect yourself. If you don't, you're just another piece in a game you didn't choose to play. So the next time you check your bank balance, remember, most of that money exists only as a promise, and promises are fragile. If this gave you something to think about, feel free to stick around. History has the answers, if you know where to look.